Well, the pre-opening rates have settled a bit higher, but you should be aware that many of these heavyweight stocks like SBI, PNB, L&T are sitting at fresh 52-week lows. So the recovery just pales in comparison to the kind of falls that these stocks have seen in the last many days. A couple of other stocks that could be in focus, names like Motherson Sumi, could be hit this morning. There is a bit of a downtick there after Volkswagen once again has been under the scanner. But Siddharth, thanks so much for giving us your views on the index and on individual names. We will okay, Shubham. Shubham as well, thank you for joining us. Rajat and Prakash, I just request you to stay back for a bit longer till the markets open. Let's invite Udayan Mukherjee now on our show to tell us his views on the market. Udayan, hi, good morning. Happy New Year to you. It's not been a very happy New Year for the stock markets. What did you make of what took place yesterday? And is that a sign of the trend to come?
Happy New Year to all of you. Morning, Sonia. But my sense is that this kind of volatility will be a fairly recurring theme in 2016. So more than 500-point rallies or 500-point falls on the Sensex, I think the key takeaway is that maybe 2016 turns out to be a fairly high year of high volatility, and volatility shakes confidence in the market. Just look at the trend of the last few weeks. You had a rally from 76, 7,700 all the way almost up to 8,000, and in one day about a couple of 100 points gets taken away on the Nifty. So, and with an attendant spike in the VIX. So I think you will probably see much more of this as the year progresses, because I don't think the world has confidence in trading equities at this point in time. There are hope rallies which are panning out, and then you get some data which is like a jolt, and the market quickly gives up its gains. My sense is that this is probably something which will happen again and again, which is why the market might remain trapped in a bit of a trading range, and within that you will have to be extremely nimble to protect the trading profits that you will be making this year. So far there is no evidence suggesting that this will be a great year for equities, at best a middling kind of a year. But for now, as the view has been that the Nifty continues to remain trapped in a 7,700, 8,100 kind of trading range. So it makes these sporadic attempts to get to the top of the range, but gets knocked back. So I'm not reading too much into yesterday's fall, other than the fact that the volumes were quite high yesterday. So it's one more of those China-led falls that we've seen so many of in the last few months. So not reading too much into it, but I think to deal with this kind of volatility on a week-to-week basis, I think will test traders this year.
Okay, morning Udayan, and a happy New Year to you from me as well. Well, the bunch of macro data we got was also a bit debilitating. India's PMI number, probably one-off because of the Chennai rains, but still a contraction. The US PMI data also indicated contraction. As well, you had previous core sector numbers which showed a minus 1.3. A lot of macro data have been looking much worse than probably we were prepared for.
You know, that's what we've been discussing over the last many months, Lata. All debates come around to finally, but Indian macro is good. So, and I always put that question on the table on whether Indian macro is indeed that good, and whether what is good is not priced into valuations already, because you won't find too many markets in the world today which are trading at 16 kind of PE multiples. So I think the little that is good about Indian macro, particularly the commodity side of it, is adequately reflected in valuations. And you know, we keep talking about how China is a black box and we don't understand the data. We look at it with suspicion. I mean, how are we much better than China? Look at our data. We are growing at 6%. One fine morning we changed some of the metrics and suddenly we're growing at 8%. I overheard somebody saying yesterday, our fiscal deficit problem is resolved. Resolved? You know, you add all the pieces which we don't declare. Our fiscal deficit picture is a monster. So, you know, we are behaving like China. We are changing our GDP growth data to make us look good. We are altering our fiscal deficit data dramatically and ridiculously to make it look good. Our banks don't report half our asset problems till the RBI wraps them on the knuckles. Is it now China-like behavior in data declaration that we are doing? So I think we should call a spade and say India's macro is probably better than most other countries, accepted in the price. But I don't think it's something to shout from the rooftops about saying, you know, our macro is so glorious that our markets cannot fall.
Fair point. But therefore, what kind of a trading range? After all, in January, you begin to start expecting this moon from the budget. Do you think that will once again work its way, or should we get used to a lower trading range?
No, I'm not a big believer of budgets doing a whole lot for the market, and I think the last union budget would have told you that you should not expect great things. Of course, the media will build it up, as it always does, as a make or break event for the markets and the economy, but it rarely turns out to be that big thing. I was actually looking at January and February performance for the stock market over the last 10 years, and I think the average return in the 2-month period, Jan and Feb, is probably 1.5% or something like that. I mean, that doesn't tell you that history bets, markets bet big time on the budget if history is to be believed. I mean, there have been up years and down years, but the average is, I think, a pedestrian 1.5% or something in that vicinity. So Jan Feb, contrary to all that talk about massive pre-budget rallies, is actually a very lukewarm kind of period for the stock market. I have no great expectations from the budget. I'm sure there will be a little bit of tinkering on the margin, but I don't think it's a defining event for the market at all. So for now, you know, for this 7,700, 8,100 range prognosis is not based on any great technical knowledge. It's just that there is no compelling reason for the market to move above 8,100 right now or 8,000 right now. And 7,700 seems to be supporting the market, so it might have some relevance for traders. And the domestic money has still not deserted the market. So I think there is a little bit of a technical cushion out there in terms of buying. And the market might just remain trapped in that. I think January would be an important, excuse me, January would be an important month in the sense that we'd go through another earnings season, and last earnings season was not great. So if this turns out to be as lackluster an earnings season as the last one, and on top of that you have bad news from China, then I think there's a possibility, not a certainty, that the market might even go back and retest the 7,500 kind of levels once again. So I'm not a big believer of levels, but restricted upsides for the market right now, and the downside is open, but that is really a global question.
So, Udayan, I mean, is this still a bull market that we're in, or is that theory completely out of the window, and 2015 was perhaps the start of a prolonged bear phase for equities?
No, I don't think so, but these are semantics, Sonia. You know, one bad year and we start talking about a bear market, one good year and we talk about 6-year long bull markets. Hindsight will tell us what market it was. 2015 has not looked like a great bull market. It could be just a year of consolidation or correction. It's very difficult to make the case for an Indian bear market right now, because, you know, as a lot of people keep telling you, there is something going for our market and our economy which is not the case for a lot of other markets. My problem is that there is rarely a case in history that the world has gone into a bear phase and India has been in a bull phase. I cannot remember in my memory when something like that has happened. So I'm not in that group which believes that, you know, India will be the jewel which will stand out even if the global markets go into a bearish phase. So the call for 2016 has to be, is China going to tip global economies into a recession kind of a phase? I don't know the answer to that. I fear that most people do not, but that is the risk that everybody should be sleepless at night about. And if the answer to that is no, then I think we'll at some point in the year resume our uptrend that we were seeing in 2014. If the answer to that is yes, I would bet my bottom dollar that India does not stand out and we go down with the rest of the pack, maybe less than them. But in a global recession situation, all markets will fall, India included, regardless of its shining macro that we've been tom-tomming about. So just to repeat, there is no strong case for an Indian bear market in equities right now, but there is some suspicion and fear of a global recession, which we'll know the outcome of in the next few weeks and months. So you need to be vigilant about that risk while you bask in your own macro.
Yes, fair point. So where does one hide? In the Bajaj Finances, in the Ashok Leylands, those that have proved their mettle?
You know, people like us always have an asset allocation call, Lata. We are not fund managers. We don't need to own 100% in our cash in equity. So when the going is murky, you can just take a call saying, you know, I don't have to be in equities right now, but much that fund managers will always tell you, you must keep upping your weightage in equity in every fall. You know, it's a very volatile and flux-filled kind of a global world right now. We don't know what the outcome will be, and I think right now discretion is the better part of valor. We stay quiet and do not take very large outsized bet on equities and see how the situation pans out. Worst case, you would probably have to buy 3-4% higher during the later on in the year, and I think that might just be the place to do. But more importantly, you must do some stock selection and just identify the sectors which you should not be in at this point in time, because some sectors seem more vulnerable to this global risk as we keep seeing in stock price reactions.
So what are those sectors, Udayan, that one should not be in right now?
You know, we've spoken about Tata Motors last time around, Sonia. It's a stock which will be very volatile this year, I think. It's not the kind of story that you should be owning unless the China verdict is quite clear. I'm not a big fan of oil upstream, though it might go up a little bit this morning. The big sector which worries me quite a lot is infrastructure, because I was really hoping a few months back the DAX sector starts to outperform. Some small mid-caps might do well there, but I think the vanilla large companies in the infrastructure sector will struggle because private capex is still struggling, and all the metrics are telling you that it's not recovering in the kind of hurry that we would have liked it to recover. I wouldn't be in a rush to buy banks right now because the bad news probably is still not out, and pharmaceuticals look shaky to me because these US FDA bombs are repeatedly coming, Cadila being the latest one, so I would stay a little underweight on that sector as well. So you keep that out and you begin to look at a portfolio which looks increasingly defensive in nature.
Oh yes, and also very limited in nature. Thanks a lot for that. We are just about a few seconds away from the market opening. Pleasure speaking with you, and thank you for your perspective. The markets actually are up in the green, at least as far as the pre-opening rates are concerned. It would be about 0.5% in terms of gains, but not quite making it to the 7850 mark. Yesterday morning, it didn't look like we would give that up so easily. And now even reaching there after the positive hue in the Asian markets looks like a struggle. But let's see how things pan out and whether people sell into that 7850 zone or buy over there.